Harmony's second quarter headline earnings per share rose 155% to 242 cents thanks to a higher gold price. Earlier, we caught up with the company's CEO Graham Briggs and asked.
A lot of it comes back to strategy. Evander is one of those operations where we spent a considerable amount of effort on restructuring it to really get it performing where it should be. In that restructuring, we were looking at ways and means of getting money into Evander because it's got a lot of potential. It's got basically 3 underground projects and 1 surface project, but it needs capital. And our problem in the capital area is that we've got a big project in Papua New Guinea and we didn't want conflict in capital. So we could either have kept Evander and just got the cash flow of that operation for the next 10 years or so, or trying to get money for that and in the so doing create a real viable future for Evander. And the new owners will certainly, I'm sure, dust off those projects, have a look at them and see which one they prefer, and they'll probably spend some money on it, and in so doing, of course, create a much better future and probably bigger production scenario for Evander. So for us, really a strategic issue. Nothing wrong with Evander. It's a nice big resource out there, but for us it's a case of, where do we as a company focus?
So you'll be putting this capital into the Papua New Guinea resource?
Yeah, our plan is really to build up a little bit of a cash pile for what's going to be a considerably sizable capital that will have to go into Papua New Guinea. It's going to be a big mine, talking a big copper gold porphyry, and therefore we need a fair amount of capital to put into it.
Now your share price has rallied on the back of the Papua New Guinea asset, a gold resource estimated at 26.6 million ounces. Investors are now waiting on more news on that. Give us an update there.
Yeah, the more news is, it's one of those times you love to sort of talk about everything that's happening there, but it's going through a pre-feasibility study now. So a lot of work streams, whether you look at metallurgy or mining or geology or geotechnical or infrastructure, all those work streams are happening, and they're progressing very well. The planned completion of the pre-feasibility is going to be in June. And that is when we'll have a better idea of capital, a better idea of what the production plan is. It may even indicate, where we have to focus a bit more of our attention going forward. So, it's nice to be newsworthy every quarter, but the reality is sometimes you have, lots of issues to do and to face and studies to do before you actually get the answer. It's simply a great deposit. There's no hesitation about that. Everything we're doing is showing what we thought it was. So what we had in the sort of concept study, scoping study, the ore body looks exactly it is. We're confirming basically everything, but we're refining a lot of things as well.
Can you give us an indication on when you expect production to take place?
Yeah, we've given a sort of an idea, and really this again comes out of the scoping study. It was intended that we finish the bankable feasibility in 2014, and that would then lead into the building of the mine, and the first production would really come in sort of 2017. So it is a long lead time. You look back in 12 and you say, wow, that's a long time, but there's a lot of work to go into that mine. Now that really comes again out of the scoping study, but the pre-feasibility study will have a better time frame of when production. And then from 2017 going forward, there's obviously quite a build-up period in production.
And do you have an idea of what the cost is going to be to get that resource out of the ground?
Yeah, it's simply going to have fantastic margins. We're talking block cave type mining. That is relatively cheap cost mining when you look at dollars per ton, processing costs and the like, and it's a high grade deposit, so it's going to have great margins. When it comes to cost, cost per ton rather, it's not going to be hugely different from other similar block caves around the world. So there aren't, it's quite logistically convenient. It's not too far away from the biggest port city in Papua New Guinea. It's not up in the highlands of Papua New Guinea. It's in a sort of reasonable environment when it comes to terrain and mountains and so on. So, I'm expecting it to be a hugely profitable mine.
What is your revenue mix going to look like when Papua New Guinea asset comes into play? Will it take over your South African assets?
Yeah, this is a big project. It may only be producing something like, for us, our 50%, something like 400,000 ounces. But those are extremely profitable, 400,000 ounces, because a lot of the revenue will come from copper. Obviously, one has to have a bit of a prediction about the copper price as well as the gold price. But, it's likely to be very negative in cash costs. So the overall effect in the company will dramatically bring down Harmony's cash costs.